Hey guys, we are starting just slightly early. I don't want to pull a Tanner and be late. Of course, if you're tuning in, you're expecting FinTech Friday. That will be tomorrow. So for some reason, we're doing holding that anytime but Friday. Don't have a time yet, but probably towards the evening. Still some travel with some of the guys. So tonight, of course, we're going to talk. And I misnamed this. I do see correctly in the comments Pain Pal, and I probably should be calling it that. Maybe Flat Pal. We'll talk about the stock price action, of course, tonight. What has changed really since the last time we've done a PayPal monthly, which has been actually closer to 2 months. So there's actually been a ridiculous surge of news. And yet, if you look at the stock, it's not been pretty. It has been an opportunity cost to date. I am still bullish. I still hold a huge position in this. Hopefully it starts moving at some point, but for now the company's executing, even if the stock's going the other direction. So good afternoon. Thank you guys for being here, by the way. And okay, so let's start here with the stock price action. This is the elephant in the room. So this is looking year to date, comparing it with the S&P 500. S&P 500, if you just put your money in the SPY or the SPX, you're up, 12% for the year. That's pretty good. PayPal, you're down 21.3% over the last year. We can see a similar story, up almost 16% for the S&P 500, down 13%. If we zoom out 5 years, of course, we all know this right here. Most of us weren't in PayPal during this time, but it has not been pretty. It is for sure, for most of us that have been holding for very long, been an opportunity cost. But, we've seen this with a lot of tickers too, where they feel like an opportunity cost. They are an opportunity cost until the market realizes it's an opportunity. And so the question is, what really changes? I did ask Steve to join, and he said maybe he can make it. He wasn't sure. So we'll see if he pops in. If he does, I'll be sure to put him in here. He's bullish on PayPal as well. But yeah, I think under 100, I need to call it PayPal a little bit more often. So yeah, I'm glad I wasn't in during COVID. That's the funny thing, is a lot of bears will point to that stock price action that we'll look at and be like, oh, look how far you've fallen. It's like, I know a few people that were in PayPal back then that still are, but there's not very many. There's been a lot of people that have come in and out of the stock as well. So the stock has been trash. Now, I want to show you this. So this is crazy. I posted this just on X to get people over here just to kind of talk, and we're going to talk about each of these tonight, maybe a few things too. But like, this is all within like the last 2 months, major stuff here. And yet you look again, let's look at that 3 month price action. Nothing. Of course, it had the drop after earnings, and it's not recovered at all. Sometimes stocks do that. It's frustrating when it happens. So why is the stock flat? The biggest reason is all of these that I just showed you. The buy now, pay later, Blue Owl deal, Pay USD, the surge. We'll talk about why and what that's doing. The Google partnership, which initially the market was like, all right, this is awesome. They're like, actually, never mind, it's not. And some analysts agreed with that anyway. Agentic commerce, Perplexity, Venmo monetization, the Big 10 and Big 12, PayPal World, Pay by Crypto. Analysts will look at these things, and some of them, things not even included here, like Fastlane, are just like a little bit harder for them to understand, like what the monetization looks like. Advertisement as well. There's two reasons for that. One is part of it is PayPal's own fault. It is. I'm bullish on them. I like and respect what they do. But when you as a company don't put out very clear figures as far as like, this is how it's going with this project, this is what we're expecting, this is what we're doing, this is how it's going to translate into guidance, and you don't offer that, you don't offer guidance on it at all, then it trains the market and it trains analysts to expect, okay, PayPal will announce a lot of stuff and it's just not going to matter at all. That's what they're trained at. So that's where we are right now. So there's really two things that need to change. One is, of course, continue to execute. And we can see most of the numbers other than revenue, they have been executing. We'll look at that in just a moment. And the other is really like over the short term, what drives and what changes that momentum is the narrative. Like there has to be a narrative around the stock. There doesn't have to be, but oftentimes, like as a stock that starts moving to, a narrative is created. But something like the narrative right now that a lot of people have with PayPal is it's obsolete. Nobody uses it. It's a dinosaur technology that they've really done nothing at all as a company, which all those things are wrong. but PayPal has to show it. It has to execute on it in the market. It has to capture that its attention. I think that that is probably going to happen over the next 2 quarters. I'm not expecting the stock to be trading like $300 or $200 a share, but I could see triple digits by Q4 report that'll be January 2025. So that's actually not that far from now. And there's a few reasons why. We'll talk about that as well. So let me get some of these questions too. Okay, so even leaps don't make sense. Maybe now I'll consider leaps. I mean, like that's the thing is I have a lot of shares of PayPal, but I also have some leaps. Those leaps are one of the reasons why I've done very well in my portfolio this year. It's like up 60 something percent overall. Got 4 different portfolios. PayPal leaps have made it so it probably would have been closer to 100% year to date gains otherwise. So we can mention that too. So this is one of those things where that would for sure change the momentum. I mean, it would if they were looking for a fairly easy way to do that. Now you can't force people to buy. Employers, employees, they have to make their own decisions. But we saw what happened with Tesla and Elon Musk. Elon Musk, of course, at Tesla is famously a stock that trades on a narrative. Elon Musk had a massive buy, $1 billion. And as a result, that completely shifted the narrative of the stock. Now, the reason why there's not many insiders buying, I think that there actually is one since Alex Chris has come on. Well, Dan Schulman himself, former CEO, bought. So it's a little bit ironic. But when you have a company that does very heavy stock-based compensation, and I wouldn't say PayPal is like very heavy, but if you look at the C-suite people that they brought in, all new C-suite except for just one guy, Frank Keller, and you look at the pay packages that's available with the SEC filings, they're getting a lot of shares as long as they execute. And so if they want a big stake in PayPal, they just have to execute. They don't need to buy any. Now, that doesn't mean they shouldn't buy, that it's not advisable to buy, whatever. But, there's other stocks like you see right above my head, PayPal or Palantir. I think that there was one insider buy there over the last 3 or 4 years. One, like period. All the rest weren't. Of course, that's a heavy stock-based compensation. I need to actually do that. I'm not sure it's probably right now because a lot of the rest of the portfolios continue to run. It's probably closer to like 14% or 13%. If the stock would ever move, it'd be a lot more, but we'll have to see. So Gig says, I have a question. Mini Steve too says if they keep buying back, they may or can take the company private. Can they actually do that to take it private when everyone need to sell their shares? So it's basically that would have to be done by a shareholder vote. So you get to the point where like this is years and years and years in the future, but let's say 6 or 7 years, PayPal's trading at exactly this. They've like tripled their free cash flow, transaction margin dollars. Everything's great and golden. And they've just bought back a ridiculous amount of their stock. They're trading maybe, at 60, 70, $80 range. And all of a sudden they have like half the float that they had, 5 years previously. They may say, okay, let's go ahead and leave it up to shareholders and see if they are willing to let the stock go private. And at that point, with insiders holding a lot, institutions as well, they may be able to do that, or they could find a private buyer as well. But usually that's the way that it goes is either vote or, a buyer that's private actually buys out the stock and gives an offer. So what is, in other words, he says, when folks say, well, they can take the business private, yes. Those are the two ways that it happens. Leaps, I would only use money here that you're comfortable, losing. I have a bunch of leaps. I'm still very bullish on PayPal. I think, by 2030, I think we'll see a new all-time high for them. But leaps have been very painful. Stock is easy to hold over the long term. Let them buy back and execute as well. We will talk about PayUSD in just a second as well. BM&R, I mean, you guys know I love BM&R. So I get it, and honestly, like, if you guys hold PayPal, let me say it this way. As a PayPal bull, if you hold PayPal and you're like, you know what, the thesis isn't there for me, make sure you do your due diligence, figure out what's right for you. But if you're like, hey, there's a better opportunity over here for me, there's no shame in taking and basically allocating towards what you have your strongest convictions in. You don't have to diamond hand everything forever. Even if you're like, hey, I think this is a good company, invest in what you deem as great opportunities and great companies as well. So Heinzie, welcome to PayPal. PayPal. So what's riskier, that or dating a westernized woman? I mean, like, honestly, That's the thing about PayPal is they're buying back a massive amount of their shares. If you look again back at this chart, like what are we realistically expecting? I've said tongue in cheek and partly out of frustration, especially when I was trading back here in the 50s briefly back in April. It's like, oh, it could go in the 40s and 30s. But when a stock is generating this much free cash flow, and that's one of the things we will talk about in just a moment, when their share count is being destroyed by buybacks, when they are releasing a whole bunch of new stuff, not all of it's going to work, not all of it's going to be amazingly accretive, but some of it will absolutely. There's only so far down it can go, barring like a complete macroeconomic collapse where everybody is just in panic. So we'll have to see. Mergers and acquisitions, actually something that Alex Chris mentioned a few weeks ago. I should actually add that to the list. And I mean, Alibaba, I've never really cared for, but I mean, like there's many stocks where you can say that I invest in not in broken companies, and I don't think PayPal is a broken company, but in broken stocks. And SoFi was another recent example of that as well. I know many of you guys are at SoFi. So, all right, I'll go back to the comments here in a bit, but let's talk about, okay, we know that the stock price is flat. What can change the narrative? I already shared that, the market needs to kind of capture this idea and understand that PayPal is more than just a dying dinosaur. It's more than just a payments company. It's pivoting very clearly into being a commerce platform. Part of that, I think, a big part of that, the thing that nearest term likely can shift the narrative is advertising. All right, guys. Sorry about that. I don't know what happened for some reason. Okay. Does not like that. Let me remove my old self. There we go. So sorry for that. I have fiber internet, but who knows? I guess I need to take a look at it. So, what, what can change the narrative of the stock? I think that the best bet is this guy right here, Dr. Mark Grather. I won't go too much into his background. Be sure to look him up. But basically, he's the guy that founded Uber Ads, ran it to over a 1 billion run rate in very little time. And it was like a year and a half of time. And it does take time to build these out, depending on the system. But he also helped Amazon ads get off the ground too. And so he's been with PayPal now for a while. They've actually launched offsite ads, by the way, in UK and also in Germany. You can actually look, and there's several people posting what these look like on if you guys are not in the area where these have been rolled out to. But you have offsite ads actually coming soon, rather, for UK and Germany. You have on the platform itself advertising as well. And a lot of the advertisers are those that pay big advertising bucks. These are the Nikes, the Sephoras, and so forth. So Dr. Grather mentioned, like today, that works along with their advertising platform, Honey specifically. I know Honey had some controversy, and frankly, yeah, they messed up. It's prior to Alex Chris, but still as a company, they really messed up with that. But in essence, they said, hey, Honey helps basically deliver actionable results. And so the results, this is ridiculous right here. 459% lift in conversion rates. So in other words, shoppers are shown a product and they're 5 times more likely to complete a purchase. That's absolutely crazy. 129% revenue per session increase, 120% increase in a 7-day revisit rate. These are like really, really good numbers. The problem with PayPal ads is we have little teases here and there, but not even enough breadcrumbs to even put together a trail and say, okay, this is where they're at. This is what they're doing. This is where they're going. That, I think, more than anything is what the market needs. Now, I think over the next 2 quarters, quarter 3 earnings, quarter 4 earnings, especially since they'll be guiding for the rest of the year, as they continue to roll out offsite ads, they might just have to do like an early reads, and here's what we're guiding on this. And there's probably more upside, but we want to be conservative. That's fine. That's good enough. But the market really has to understand how this product is actually working and what internal measures they're using, what their goals are. Now, one little teaser though for this, Dr. Mark Gaither, again, same guy here. He was interviewed about 2.5 months ago. Really good interview, and he had said this is going to be a they asked basically what internal measures they're looking at, how big these ads could be, and he had said that they weren't going to release the figures yet because they hadn't done that. But he said, you know what I did with Uber, you know what I did with Amazon. We have similar ambitions here. So these are high margin things. So none of this is factored in the share price at all. Might be a little bit early for that. Okay, let me take a look here. Yep, frozen. I'm back. Let's see. Yeah, exactly. Data and ads. And they have a huge advantage as far as data. Over 400 million active users, over 35 million merchants as well. Globally, they know the detail down to the granular level. Most companies, they might have a lot of merchant data or a lot of consumer data. When you have both, I mean, that's just an easy sell, an easy thing for advertising as well. So, yeah, I apologize. Thank you guys for sticking around after that. Those in PayPal, enjoy the pain and torture. I mean, that's what it has been. And you do it. That's the only. This is the way that I think that is you need to consider. If you're not in PayPal, if you're thinking about it, it has been an opportunity cost. Doesn't mean that it always will. And it is undervalued. I think almost everybody looks and they know that it is, and they see that there's an opportunity. You have to ask, are you willing to wait around? And so be careful about any short-dated stuff, short-dated calls, short-dated expectations as well. And yes, we're actually going to talk about Braintree right now. So beyond changing the narrative and shifting it, showing it like that PayPal is more than just a payments company, and ads is probably the best way to do that, but there are a lot of other things that they're working on that can as well, is that they need to actually show that top line acceleration and growth. So if we look at their top line acceleration, of course, it doesn't look very pretty at all. There are reasons for that. A big part of the reason is that they shifted here. We can see back in Q3 2024. So a year ago, they said, okay, we have a problem with the way Braintree was structured under the prior leadership, where they were selling it, trying to drive top line revenue. And for, in some cases, like no cost, no money, they'd almost give you the product. Problem is, their strategy was like, okay, if we do that, then maybe they'll get other value-added services with us. It'll be a good thing. If that worked out, great, that's awesome, but it really didn't. And so they said, okay, we need to have these conversations with a lot of these large merchants and basically say, hey, we are having to drive or charge a higher margin, higher take rate. In return, you can give us lower volume if you want. Those conversations went well, but as you can imagine, Braintree, when you're charging a lot more and you're willing to take less volume, it was flat and even negative in Q1, flat in Q2. We're going to see what happens in Q3 and Q4. They did guide, by the way, only for low mid digits. I think 4% was it for revenue growth. They'll probably come closer to 6% here in Q4. So that's a quarter from now. I expect that this will be quite a bit higher because all the headwinds from Braintree will be alleviated, or at least almost all of them at that point. And you also have much friendlier comps because of when these things were happening. So I think that's, again, when we see that turnaround as far as the narrative with PayPal. Now, it's going to take them a little while to get back to 10% or higher revenue growth, but it may not take as long as some of us are thinking. Again, advertisements are cooking, and there's a lot of other new projects as well that are going to help them accelerate this next year. Like, this is not even very far, or even before next year, that top line revenue. We know the bottom line is very good too. Now, one other thing from the earnings, they mentioned this a whole bunch of times. Let me find it right quick with free cash flow. That's their Q2. And by the way, you can see total payment volume, revenue. That's just not really exciting at this time where the market really wants, above everything, that top line revenue growth. Now, they reiterated this a bunch of times in their earnings call, on the slide deck, in fireside chats as well. 6 to 7 billion in free cash flow. You can see right here, adjusted free cash flow was actually not that at all. It was down a lot. Now, that's not really a big concern, but what's happening basically is that they guided for $6 to $7 billion. the way that PayPal is structured, sometimes that's a lumpy, especially when they sell some of their buy now, pay later loans. We'll talk about that as well with Blue Owl here in just a second. But let me pull up the free cash flow to give you a look at what they did and what they're expecting and why these next 2 quarters, again, I think really will shift the narrative. So here is the free cash flow numbers. And we can see, well, I'll show you the annual basis in just a second, but these numbers right here have not been very good. Free cash flow is 692 and then 964, and they've guided for between $6 and $7 billion. And so this is $1.5 billion. So if we take the midway point of that, we say, okay, that's 6.5 billion. They're over the next 2 quarters, quarter 3 and quarter 4, going to deliver $5 billion in free cash flow. Look here and tell me if there is any other 2 quarters together where they came even close to that. There isn't one. I mean, this right here, quarter 4, 2023, mostly because they took free cash flow here and put it here due to the KKR deal. And they also divested from Happy Returns at that time. But this is not because of divestment. It's not because of anything, timing stuff. I mean, a little bit here as well. Let's look at this in the annual basis too. So again, they're guiding for between 6 and 7 billion. Prior to Alex Chris, you can see free cash flow had actually topped and was trending down, even in spite of that divestment of Happy Returns. Under Alex Chris, it's reaccelerated. That's a common theme with PayPal. And so when PayPal, and I don't think they guide very conservatively, when they come out with 5 billion or higher over the next 2 quarters for free cash flow, along with reacceleration on the top line as far as revenue growth, and also very clear guidance with what they're expecting with some of these new projects, like advertising, I think is probably the most important of these, then I think that really captures the market's attention. Now, what does the market do with PayPal at that point? Again, I'm thinking maybe $100, $110, $120 a share, and we might trade it in a range a little while as we see them continue to execute as a business. But I do absolutely believe that they'll hit that all-time high relatively soon. Okay, so let's pull up a couple of these as well. So talked about Braintree there. If you have more questions on Braintree, let me know. Yeah, this is kind of where I'm at, Josiah. Barring crazy macro stuff, seeing PayPal drop much beyond this, like that's the thing is risk and reward. Is there less reward with PayPal than some other stocks that I hold over the next 5 years? I'm pretty bullish on PayPal, guys. I'm expecting an all-time high by 2030. But yes, I would say that that's probably not going to be my best performer. I think that there's probably 3, 4 other stocks, maybe 5 other stocks that I hold and own that will, I wouldn't say will, have a good chance of outperforming PayPal in that time. So why am I in PayPal then? Well, mostly because the risk, like if you look at the risk, like some of the other stocks that I'm in there, like Robinhood might be one of those that surprises people. Maybe it goes up 4 or 5x in 5 years. That'd be crazy, but it can. But there's a lot of risk there too. Crypto winter, if it hits that, if they have harder year-over-year comps, if there's a macro slowdown, something like that, Robinhood is pretty pricey where it's at. Palantir is pricey. Hims and Hers isn't cheap anymore. BMNR, it's if it's in the middle of a crypto winter, it's going to get smacked. Versus PayPal, the risk is just the risk is really opportunity cost. That's most of it. Tanner let out my price target. I'm not sure that I shared a price target. So other than 2030 for the all-time high. So which is by the way a lot easier. That's one thing with PayPal. Actually, let me do this here. Now, this is not the best way to look at this, just because it makes it look like, oh man, they've cut their shares in half. That's not really what's happening here. But you can see this acceleration. Oh, this is on the yearly standpoint. Let me go on the quarterly. That they are just eating their float alive. And when a company is able to cannibalize and also grow top line revenue and also have growing free cash flow, so they're not going into debt like Fiserv that's like, hey, we're gonna go into debt and just go ahead and use that to buy back a lot of our stock. No gimmicks or anything here. Like it's just hard to see PayPal not do really well as a stock in the future. But again, they have to continue to execute as well. I love this comment here too. SoFi Hood, Palantir, and many others, Meta, all were a pain to hold, opportunity cost. People were with some of these companies, not so much Palantir. They were saying it was fake and it wasn't real. for Hood and SoFi, they're like, these are dead companies, dead stocks. What turnaround? I'm not sure what you're asking there. So let's see here. 425 million shares traded with very little movement. I mean, it's been flat, pal. That's one of the reasons why we're called that. Sigig says, do you think that in a few years PayPal can get back to all-time highs? Yes, yeah. So let's actually pull that up too. Let me remove here the S&P 500 and let's pull up the all-time high here. All-time high, and I know it was 300 something. You should know what this is, but I want to double check and not give you the right number. 308.53. Now, back when it was 308.53, this was back in 2021, you have to also keep in mind the market cap. We are looking at about 1.2 billion shares. Now, by 2030, a lot of it depends on the stock price action. They have basically committed, I think that there's $16 billion left in their buyback program, which their market cap's like 64 billion. So in essence, a quarter of their market cap, they said that they're going to be buying back likely over the next 2.5 years. Beyond that, they've said that they're going to use about 80% of their free cash flow to be able to buy things back. And we do know that free cash flow is accelerating. So by 2030, I've run some calculations, but again, it depends on what the stock is trading at. It could be that we're looking at a PayPal that instead of 969 million shares, we're looking at something in the 700s, which is so much lower than where it was at 1.2 billion. To get to that price where they were previously of the 308, it's a whole lot easier just because that market cap is a lot smaller too. So I'm not, saying PayPal is going to start growing 20 or 30% year to date top line revenue. I do think that they get back to double digits, which is really important over the next couple of years. But they'll be growing top line as bottom line, as buybacks continue to fuel and just destroy their float. And it makes it so much easier once that narrative shift hits, where we'd be looking at, maybe here in in February, March, April, we're like the 110, 120 range. Now, that's nowhere near the all-time high. They have to execute on a lot of stuff to get there. But it's, in my mind, not really that too much of a challenge. TPL says that SoFi's turnaround was Galileo wrapping up. I actually disagree. I think that there's a couple of things with SoFi. They were helped by macro. For the longest time for SoFi, macro was so negative towards it. And honestly, right now, PayPal, macro hates payment companies right now. It hates it. If you look at Adyen, it hates Adyen. It hates Shift4 as well. It hates a whole bunch of these. That's not going to last forever. It sees that all these companies, not just PayPal as well, although they always give the most hate towards PayPal, it seems like, are being disrupted by crypto and by other payments. And Visa and MasterCard are even being caught up in that too. There are some exceptions, but for the most part, this is one of those where once the macro shifts from really negative and terrible for PayPal, like it did for SoFi, that helps a lot. The other thing for SoFi is they had that phenomenal quarter where they grew by a ridiculous amount in quarter two. And so that helped really shift things along with the macro shift as well. So all of a sudden the narrative shifted too. And SoFi is like, oh man, it really is a one-stop shop. And I haven't heard AWS fintech as much, but yeah. All right, let's talk about this from Daniel Stocks. It's one of those topics I wanted to cover. PayUSD. So this is one of those projects that they announced back in August 2023. Back in a time when, frankly, the market was not very interested in crypto. When that launched, honestly, I wasn't that interested in the stablecoin. I'm like, it seems like they should have launched this 2 years ago. There's reasons, I think, why they didn't. They actually launched it right before Alex Chris came in. And so the sad truth with PayUSD is they launched it like almost every other thing was launched at the time with PayPal under Dan Schulman, is they're just like, hey, let's throw it out there and hope it does well. No real comprehensive plan on how to use it, how to make it grow, what it can be used for. That's the nice thing about Alex Chris being here, is he actually has a plan with things, and he's been able to find where this can integrate well into the PayPal ecosystem. Of course, they use it for PayPal Ventures. They use it internally. But let's look at this massive growth and see what's going on. All right, it's taking a moment to load. There we go. So this is total stablecoins. That's not exactly what we want to look at. But if we look at here, PayUSD has moved to 7th as far as stablecoins. Now, some of these are not really appears to pay USD. Now, Tether and USD coins certainly are, but some of them like DAI are really used just for Web3 applications. This is not something that you're going to see a lot of payments or anything built out of. BlackRock is more used internally. So nevertheless, we can see that this like 1 day change, 20% is insane. 62% over the last 7 days. This is not normal. The reason why, if we click on Pay USD, we can see some of the activity here. Actually, some of it's not listed quite yet. Initially, they launched like almost every stablecoin on Ethereum, and then Solana, and then some other chains as well. Now, I don't see it yet on XLM, and it may take a little bit, but Stellar is one of those that they partnered with. Oh, actually, let me pull this up. 1.87 billion. I think DeFi Llama is like a day or so behind. If you look at CoinMarketCap, it's over $2 billion. But basically what's happening is they're scaling out a lot of Web3 opportunities for PayPal. Let me pull up one of my more recent posts here. And I highlighted some of these headlines over the last 2 weeks. Okay, so I don't forget anything. So PayPal and Spark said that they were going to join forces, grow PayUSD by 1 billion. This is really good. If you look at the Spark ecosystem, there is a lot of potential use for PayPal. They hit 200 million, by the way, in their ecosystem. They're like, by the way, in the next coming weeks, we're going to grow it to 1 billion on chain as well. So this again is DeFi ecosystem. So it's a lot of Web3 stuff that you'll continue to see. Now they have Tron, Avalanche, SEI, and I think that there was a total of 6 others that were available blockchains through Layer 0 partnership for PayPal. And so that continues to increase demand. And also the Stellar partnership finally launched as well. PayUSD is now available on Stellar. So a lot of these combine with just like everybody really wants to be in stablecoin. By the way, PayUSD is also able to offer a yield. Most stablecoins cannot do that. It's kind of a loophole that's in regulation. Maybe that's closing next week. We'll have to see. There is a crypto summit there in Washington, D.C. So what does this mean for PayPal itself? It does give them some incremental additional revenue. Again, PayUSD is partnered with Paxos, and we don't know exactly how the treasury yield is split between these two. We know that they are giving yield to those that are holding PayUSD, but some of that does go to PayPal as well. The biggest thing that they can use PayUSD for is, of course, internally with their projects and pay by crypto, which is something that they announced more of as a defensive measure here about a month ago or so, when Coinbase or Circle rather had said, hey, we can do pay by crypto. And they said it's just going to have a 1% rate. Now, there was it looked pretty interesting, but there's some things that payments companies know how to handle that I didn't see built in natively with what they were trying to do there. And of course, it's hard to build something up when you have no merchant penetration at all. For PayPal, they just said, you know what? We're just going to pay by crypto, which has a 0.99% rate that they charge. So that's actually at my mind, I was like, okay, this is a little bit bearish in terms of like what they'd actually be making for a take rate for cross-border. So there is going to be some headwinds for PayPal over the next couple of years for that. But nevertheless, that's defensive, and it also keeps a lot of that here on chain for PayPal as well. Let's see. Would I buy Shift for? I did swing trade it, made some money off of it. I think it's a good company. Jared Isaacman is no longer there, so that's something that, well, not in his role. Yeah, I'm sure he's pokes in, but he's mostly focused on other things at this time. So I think it's good. If it continues to fall, maybe it gets snatched up by another company in terms of an acquisition. We'll have to see. But they've done very good things as far as their technology stack. Oops, that wasn't what I was supposed to throw up there. May Roy be with me and PayPal. PayPal, that's right. We're all feeling that. Sageg says, I feel as strongly as ever that PayPal stock will really fly when they issue a dividend. I can see tons of ETS piling in the stock. Okay, so that's one of those things that I'm seeing between issuing a dividend or shareholders, like inside shareholders buying a position, just buying it outright, or really reaccelerating the buybacks and just saying, hey, we're willing to go over debt over this. This is really silly. Or even using PayPal to say, hey, let's go ahead and start, probably not a Bitcoin treasury, but an Ethereum treasury at some point. Alex Chris is very much an Ethereum guy. If you look at his handle there on X, He's got an ETH handle right there. But those are all things that it would probably shift the stock price, especially insider buys. I think that's the one thing that would. But a lot of this, including mergers and acquisitions, are things that I think that they should do from a position of strength once a stock has risen. Now, I don't mind, and I don't know if you mean this by this gig or not. I don't mind them issuing maybe an NVIDIA-like dividend where it's just really small and negligible at first, that they grow over time. And I do think eventually PayPal will be a real dividend stock, but it may take a couple of years. And I think that most companies actually see the appreciation in their stock, not when they initially make that switch. You'll see some, but really when they do this from a position of strength. Otherwise, the market sees it as, oh, they're doing these dividends out of weakness. Is it really sustainable? Can they really afford this? Instead of just saying, all right, great, it's a dividend stock. We get that too. Do all-time high by market cap. So if we did this, they would have a long way to go. They would have basically it's a 10x in market cap to get to that previous all-time high. Not a 10x, excuse me. I had it the other way. All right, let's see. We got a lot of comments here. 2x in a year from here. Yes. No, I think that that's pretty likely. We're trading in the mid 60s. I think that should be long enough time to really see that ads are working and some of these other projects are working. We'll talk about a couple of the other layups that they have actually to help drive incremental revenue here over the next year. But yeah, I would not be surprised at all to see it, 135, 140. Haven't made that formal, but yeah, I guess Tanner's throwing that out there. So 2030. No, I disagree. I don't think that's nuts at all. Okay, so eBay has doubled over the past 2 years and was a dead stock, was treated as a company that was no longer relevant and dying, and now it's certainly not. Narratives can change. Rate cuts, it's good for some elements of PayPal's business. It's bad for others. They actually make just a little bit less yield from customer balances as a result. So there's some headwind there. But overall, it's better for the economy, better for consumers. So I think in net, honestly, it's kind of like Robinhood, where there's for sure some headwinds from the cash sweep stuff that they're able to offer, but equities do really well. So in net, I think it's a wash. Unlike with SoFi, rate cuts, there are a couple small aspects of the business that it hurts, but man, it's so bullish for SoFi. So yeah, here I just think it's a net neutral overall. PayPal invested in Paxos early on. I don't know that. I know that was a thing from PayPal Ventures, and so you'd have to look into that, see if they still own that stock. I hope that they do. Paxos is really, really well positioned right now. Let's see. I mean, like payments companies are just in the gutter, like all of them. Fiserv has a lot of debt. You know where a lot of that debt came from? Buying back their stock. I mean, that was the plan of it. So I personally, like, if PayPal did that, if Alex Chris said, okay, we're going to take on $10 billion in debt and buy 10 billion more back in stock, I'm okay with it, but I don't love it. I don't mind if companies take out debt to really grow their company, but for things like that, but I get it. Like it's very cheap. The stock should be going up over time. That adds value, but yeah, I wouldn't want to be in Fiserv simply because of that. I don't think it's sustainable what they're doing at all, and the market doesn't either. So PayPal going deep into crypto was involved in the hyper liquid hype coin bid with Paxos. That's right. I remember that too. Let's go down a little bit further. dLocal, they partnered, of course, with PayPal like six or 8 months ago for Latin America as well. I think that was a win-win partnership. dLo, I think, is a well-run company that has to pivot at some point over the next few years away from being a payment service provider, which, I mean, all of them, no matter who you are, even Adyen, over time, you see margins go down. You see that there's a lot of competition out there. If PayPal is just a payment service provider or just buy now, pay later, I'd be like, okay, I'm not in this company at all, but they're more than that. So the one thing with dLocal is they're in a market that a lot are not going after aggressively, mostly in Latin America. So they have some time to pivot. They have some higher margins. They have a lot of growth ahead of them, but I don't know if they can or not. I'd rather just buy PayPal, frankly, though I think that they'll be okay. I agree with this. They need to develop data ads before dividend. Yes. They have to show that they're actually more than just a payment company. Yeah, that's it. The one thing it would do, and you see this with companies that do this, like Nvidia, is some people will not hold a stock or buy a stock at all unless it has a dividend, even if it's an Nvidia style dividend. So, but it's more of a gimmick than anything. Although I think that they will have a real dividend at some point. Let's see. Would you consider buying a long-term 27, 28 calls on PayPal instead of holding shares? I have both leaps for let's see. The furthest dated leaps that I have are actually January 2027. I'll need to actually look and see if I want to roll some of those out actually a further year or not, or just buy some. We'll have to see. But yeah, I like holding both. The reason why is when I see a stock as ridiculously undervalued, I don't do just leaps, but I will buy some leaps and I'll buy some shares. Shares, I can just let ride. I can hold them. Sometimes I'll sell covered calls on them carefully before they start rising, but I'm careful with that just because I don't want to miss most of the rise because I was greedy after a couple of bucks. But I like also holding leaps too, even though it has been painful with PayPal. So watch out for that, simply because I can hold onto the stock, not sell the stock, and then sell the leaps as they go up and make some money at the same time. Let's see here. Any chance of an acquisition? Perhaps a small treasury such as Etzilla. If they bought Etzilla, I would be really confused. I think that maybe at some point, if PayPal is just printing money and they want to do something else, they could look at becoming, or at least having some Ethereum there on hand. That would be fine. I don't think that they do that. I think more likely than not, whatever they buy would probably be a smaller acquisition. Alex Chris talked about this a month and a half ago in a fireside chat. Use an acquisition order for the first time. Now, Alex, in his time into it, they did a lot of acquisitions. Most went famously well. Of course, there's the one that was MailChimp that was the one that went the least well. It was a learning experience for him, but it still was successful ultimately for Intuit. So he knows how to handle that. But the thing is, PayPal, when he came in, PayPal, their tech stack internally, as far as their culture, their focus, their mission, everything was just not cohesive at all. So Alex Chris has fixed a lot of that. And now they're at the point where, maybe the next year or 2 years, we'll actually start seeing them do smaller acquisitions that really help them make this pivot, not necessarily to adapt, but instead something like that gets them further along with their mission of being a commerce platform. So we'll have to see what that looks like as well. So I have January 2027 leaps. They're either $100 or $90 a share. So they are out of the money, but I don't know. I think that they're pretty conservative with that strike. I try to do it every month, and somehow I think I just got busy last month. So PayPal monthly is supposed to be monthly. It's now like every other month. By the way, I do have one booked on the calendar. The other, we're looking for a date. Some very interesting interviews about PayPal. I won't say it's with PayPal executives or not, but you guys will like that content. One's going to happen in October. The other one might also happen in October or maybe November as well. We'll have to see. It might. They're getting close, to earnings. So, well, I maybe said too much there. It's not Alex Chris, by the way. All right. So let's look at some of these things that came out with PayPal recently and what I think is a really exciting opportunity. One of those things that they announced, and this was, of course, back in July, but I think that we didn't actually have a PayPal monthly at that point since then, was PayPal World. PayPal World, they announced this, the stock went up just a little bit, and then they're like, oh yeah, this is PayPal, never mind, it doesn't count. So PayPal World, in essence, is PayPal saying, okay, we have a massive wallet, we have a massive number of people, and there are companies across the globe that are also positioned just in their region with their massive wallets. Companies have talked about having a global wallet, in essence, is what this is, but it's never really been done. And so they said, okay, let's figure out a way then that we can work with Mercado Pago, NPCI, as well as UPI as well in India, PayPal, TenPay Global, and Venmo. And there's some as well that it sounds like that they're looking or thinking about getting in this. I would love, by the way, I don't know that it'll happen, but seeing Apple Pay actually get involved. Apple has a wallet, Google Pay as well. I think Google is actually more likely than not. We'll talk about Google in just a second. Now, you might question, so what this does basically is This allows PayPal and Venmo to work anywhere any of these major players are. And so this unites the wallets of all these companies, not in one system necessarily. There is, even when, Alex Chris, or I think it was Jamie Miller explained this in a fireside chat, they do make some revenue, basically, no matter who is using this. It's not like a massive amount, but what it does is it basically broadens where PayPal can be used, which is always a good thing. Makes it easier to use around the world too when you travel. But the big thing, which the market is sleeping on for whatever reason, is in regards to Venmo. So right here, PayPal and Venmo become seamlessly interoperable. Now you might think, well, isn't it already? When Venmo was bought, it was almost bought as an afterthought during the time when they acquired Braintree. And at that point, for the most part, when PayPal would buy something, they'd say, okay, now you're on your own. Hope you do well. And they wouldn't work it into their ecosystem at all. So, case in point, they rolled out under Dan Schulman. This is back in late 2022, early 2023, Pay by Venmo. Instead of just using Venmo for remittances, they said you should actually be able to pay it. The problem was the take rate on the Venmo piece was much lower than PayPal. And so what happened is, a customer that had PayPal and Venmo would see the checkout and they'd be like, okay, well, I'll use Venmo this time. I like Venmo. And PayPal lost money because Venmo and PayPal were competing with each other. It's terrible. You also haven't been able to, and you still can't, although they've talked about this, and this actually gets sealed by early 2026. I think it actually happened before the end of the year, but I could be wrong, where you can actually send money from Venmo to PayPal and vice versa. Something that should have been done years and years and years ago, but it's finally being done here. Now, here's the easy layup. So PayPal and Venmo become seamlessly interoperable. Venmo, again, is basically just here in the United States. That's it. And all of a sudden, with PayPal World, it says this new functionality will allow PayPal and Venmo users to send money to each other anywhere in the world. And it says, in addition to peer-to-peer payments coming in 2026, Venmo users will be able to shop both online and in stores at millions of merchants globally that accept PayPal. For merchants, it's a new way to reach this base. So there's a lot of people out there that don't really use PayPal that much, but they use Venmo. They like Venmo. They like the experience. And all of a sudden, this whole world will be open to them finally because of PayPal World. That is an easy lever for driving transaction payment volumes for PayPal. It absolutely is. Let's see here. Good discussion there in the comments. I'll let you guys keep discussing that too. All right. So already talked about second half expectations. Just talked about this as well. Another big piece too is this Google partnership. Let me pull this up right quick so we can see what this looks like. All right. So PayPal and Google have already been partners before. But this was an interesting announcement on September 17th. Frankly, this was one of those when they announced it, I started thinking, well, maybe this is what actually shifts things for PayPal. And people actually see PayPal is not a dinosaur. It's not dead. We'll see a change in the narrative. Nope, didn't happen. PayPal is still flat, pal. It's still been where it's at. But Google and PayPal have worked together in the past, but there's a few different shifts here. So in essence, this is a trade-off of several different things. So PayPal, maybe 4 or 5 years ago, actually shifted to Google Cloud. And so it just mentions here a deeper partnership. That's what a lot of this is, with a couple of different pieces. But PayPal will partner with Google Cloud to reimagine its technology foundations. There's some fraud stuff as well that they're using. Now, Google themselves is going to use PayPal in a number of ways. This right here is the most meaningful, at least in the near term. Expanded payment processing. PayPal Enterprise Payments will be one of the key payment providers processing card payments across products like Google Cloud, Google Ads, Google Play. I don't think this is exhaustive either, boosting PayPal's role as a trusted payment solution within Google's core platforms. Elsewhere, it's referred to as they would now be a key. Oh, actually, it's right there. I see it. Key payment provider. So the way that this works, so this is referring to Braintree. Google Wallet, for instance, or Google Pay is one of those things where Google isn't their own payment service provider. So if you're using that for something other than remittance, you're using it somebody like PayPal's Braintree or Adyen or Stripe, and there's some other smaller guys out there as well. And so there's a lot of times when payments are white labeled, you don't know exactly who's doing it or running it, but it's one of those three. Now, with the massive companies that are in the world, like Shopify, like Amazon, like Google as well, they usually pick two, at least two or three or even more payment service providers, and they'll have them like, okay, this makes sense in this region, this makes sense in this, or for these type of payments. But the real reason why they do that mostly is redundancy. Redundancy in case there's a technological failure that one of them goes down, they can just merely shift that burden over to somebody else and make the money. But the other is also so like if they're just using Adyen, Adyen doesn't say, okay, now that we've got you, we're going to charge you an arm and a leg and a kidney. So this language of being a key payment provider, they already were being used by Google. It's ambiguous. We don't know exactly what it means, but this clearly is a deepening of this relationship where PayPal is going to be used across Google's ecosystem quite a bit more, even as this is a deepening of that Google Cloud partnership too. Now, beyond that, this was the other interesting piece right here to me was agentic shopping and commerce experiences. So previously, PayPal had partnered with Perplexity and are doing the same thing and working with them for agentic commerce, where you can go into Perplexity and be able to actually order things, and PayPal is able to execute this. They're all, of course, using Model Context Protocol or agent to agent. Google has their own protocol as well. It's mentioned in this briefing too. And so Google now is saying, okay, we are going to use PayPal too. Now this, by the way, just like the payment processing, it's not exclusive. You don't do exclusives like that typically when you get to the size of Google, but they are one of several players here. And it says that the partnership will bring together PayPal's global payment infrastructure, data-driven personalization, which is actually a key direction that they're going, and trusted identity solutions. So it sounds like that there's some other value-added solutions as well that are in that. KYC is just increasingly important, especially with agentic commerce, alongside Google's AI expertise to deliver these experiences. So this is one of those things where didn't shift the market at all, didn't shift their perspective, but at least with the expanded payments processing, even if agentic commerce never becomes a real thing, I think it will, but we'll have to see. This is one of those drivers of revenue too. They have so many of these where it's like, well, maybe this will change overall revenue by 0.5% or 1%. Well, if you have like 6 or 8 of these, you're back in double digits in no time. And I don't think it's an if, but a when that happens as well. Can you see PayPal selling their customers' data purchases? No. They've talked about this a number of times, and they've been very clear that they will absolutely not sell their customers' data. They've had advertisers, they've had other platforms as well approach them and say, we want this data, we're willing to give you a lot of money for it. And they said, absolutely not. We value our customers' privacy too much for that. They've also made it easy to opt out if you don't want to be in personalized experiences. But the good thing is with PayPal, with the size and scope that they are, with the partnerships for advertising that they've announced and they've done, they can use and leverage that data and do a lot more with it than what's been happening for a while. Next, could you see PayPal paying a giant company like Apple to become the primary checkout payment, similar to what Google does with Apple? Maybe. I don't think that they would do that necessarily. Again, large companies value redundancy. Now, being primary doesn't mean you're the only one that's being used there, but I don't know that that strategy actually works. I think most of the time, these companies are looking just for a reliable partner more so than the actual cost, especially when they get up to a certain size. Now, cost does certainly matter. The other thing there is regulators. Would regulators actually tolerate something like that, which really hasn't been done? I don't know, and I don't think that PayPal would want to deal with that necessarily. What is the annual income expected from this deal with Google? This is the problem. We don't know. I mean, if you look at this, analysts have come out and they've said a couple of things. There was one, Fawcett. I can't remember the firm that he works with. I read his segments of his research report that came out, I think the day after when this was announced. And he's like, oh, this doesn't change anything for PayPal in the near term, maybe the far term. If you look at, by the way, analyst expectations for a couple years out, those have gotten a little bit higher. But for the most part, analysts continue to make it lower and lower and lower. And now they're at the point where it's just almost unrealistic to the downside. And then that can happen oftentimes when a stock is stuck in a range and in a narrative like this. So, but anyway, PayPal, again, like analysts don't really know what one of key payment providers means. We don't know. They don't know how much they're making from ads. They don't know, as far as like the Venmo monetization, the stuff we talked about the PayPal world, what exactly that'll look like. It's kind of a we'll see when results are actually there, and that makes it, like, to be fair to analysts, like difficult to actually project out. It is accretive, and I think analysts have been overlooking a lot of things with PayPal, not just potential, but things that they've actually been doing very, very well. But that's a difficult thing. Thanks for being here, Reese. By the way, glad you guys we can share the pain of being a PayPal shareholder together. I won't go like super long, by the way, here tonight. Maybe another 20 or 30 minutes at most, maybe a little bit less as well. Daniel Stock says, I heard Venmo might partner for stock trading. Is this a possibility? Let me find that. Maybe. Well, okay. It's not an exclusive. There's no insider knowledge, but they had these on all hands meetings. They post things on LinkedIn. Actually, I know exactly where to go. Hope it doesn't get them in trouble. But let me pull this up here real quick. And it may even be deleted. We'll see. That would be really interesting too. In essence, as they have these meetings, they'll sometimes share screenshots and just say, hey, we're excited about the future, about this thing and that thing and the other thing. And they showed some screens that were a little bit blurry that said something very interesting. Oh, okay. It's actually deleted, which is really interesting. Okay. I can pull this up. And I actually saved some screenshots too. Okay, here we go. This is not my screenshot, but I did look and verify it that this was from the all hands. And you can see it says, it's very blurry, I know, how we're continuing momentum in the second half. Talk about the college. By the way, this is one of those things with Venmo. The Big 10 and Big 12 partnership. We'll have to see what this does with Venmo, but I and also PayPal. It's a really nice thing. There's a lot of college campus kids that are impacted by that. What I haven't seen is Venmo being downloaded a whole lot more than normal in August. So that's not a great thing. That's not what I like to see. In-app commerce, they mentioned this here through Built, powered by Built, and they have Otter, Ticketmaster, Built, that you can buy things directly right there. This right here, Venmo Stash. That is what that comment refers to. Of course, P2P interoperability. That's what we looked at with World. Let's pull up Stash here. Just let me make sure, actually, in case I pull up a wrong kind of Stash. All right, so it's a wallet system, Stash Wallet, and you can do a lot of different things with this. But one of those things you can actually do is buy, trade, and send stocks, from my understanding. So that's really interesting. It has not been announced. The person that shared it on LinkedIn, I see that post has been pulled down. So yeah, this is going to be something that'll be interesting when it's actually announced, but we'll have to see what that actually looks like. We don't know. We just saw that one very blurry screenshot as well. Roy, do you believe PayPal would be a competitive to Circle? So Circle, it holds USDC. I won't pull up DeFi Llama, but you can go there. You can see how large the market caps are on Tether and also Circle. I think that PayUSD is potentially, rather than probably going to be like the third out of 3 stablecoins in terms of real payments use. But we'll have to see actually what happens with Stripe. They're developing a stablecoin internally. There's many others as well that are looking to do the same thing. PayPal is very well positioned, but they've done less with more for a long time. So we'll have to see what they do here. But no, I wouldn't say necessarily that they're really much of competitors. I mean, they are, but that's not their main competition. They are a disruptor along with Circle a little bit more so too. What do you think the fair value of PayPal is? Should I do a leap? only you can decide what to do with leaps. Be a little bit careful with those because, again, if the stock sits there, your stocks do just fine. But your theta decay actually causes these to bleed over time. I have leaps. I have shares. I think fair value is about 115, 120 right now. Now, as free cash flow ramps over the next 2 quarters, fair value, I think, increases quite a bit. Again, I look at a company at this stage, free cash flow is one of those very meaningful things for PayPal. So it is important that they execute on that. I think that they absolutely will too. So we looked at the PUSD surge, Google partnership, agentic commerce, Perplexity, Venmo monetization, a bit there as well, PayPal World, pay by crypto, and mergers and acquisitions as well. So a lot of new stuff for PayPal, but it has been a pain. And we'll have to actually see what changes in the future. Now, let me pull up one last thing here. And let's see if I can find this. All right. I like anytime Alex Chris talks. I have a little bias on that. Let me remove this, and I'm going to add stop there. Add a tab here, and let me know, guys, if you cannot hear this. But this is a cool little video.
And they're counting on us. Each of those merchants that today is trying to serve their customers in their local area, tomorrow, those merchants are going to be looking to serve the world. I think it is our responsibility to innovate for small businesses.
Hi, my name is Monica, and I'm part of La Rifa Chocolateria. We first started La Rifa as a very, very small passion project. We wanted to make chocolate, but we wanted to make chocolate with an identity. For us, it is really important to understand the origin of the cacao beans that we work with. It's the bridge that connects people with cacao and the traditions and Mexican chocolate. Right now, my personal favorite is Selva Lacandona. This is a chocolate that is coming from one of the most important rainforests in Mexico, who carry cash, or its website. I would definitely recommend PayPal because it's super user-friendly and commissions are super accessible. So yay, PayPal.
So why did I show that? It really showcases where Alex Chris is. Of course, as he led into it, his whole focus was on small and mid-sized businesses, which grew to like half of the size of Intuit. When he came in, he saw that PayPal was a lot more of a mess than I think anybody, including myself, imagined. He's cleaned house. They've done a lot of things right. There's still more to do, but a lot of the hard work, the really hard work, is actually behind them. There's a lot of exciting things in the near future, but a lot of what he's geared for as far as projects and as far as things that they've done. Yes, there's things for large enterprises. We saw the Google partnership, but there's a whole lot that's been done as well, geared towards these small and mid-sized businesses. And that's just time and time again, like listen to them in this next earnings and Q3 earnings that are coming up here this next month. Yeah, it is next month. You're going to hear a lot of that. You're going to see, PayPal always does really well with customer testimonials and looking at Lyft and stuff. But as it relates to advertising, as it relates to crypto, as it relates to fraud and KYC, as it relates to like having access to these massive other wallets that are around the world, a lot of so much of what they have built is so accretive and so valuable for small and mid-sized businesses. That's the direction that they're going. The market doesn't really understand that right now. It's going to take them a while. Now, there's one actually last piece. I forgot about one. I just saw it. The Blue Buy Now, Pay Later and Blue Owl partnership. This is actually important too. And I'll bring up this announcement here. Actually can't find. Okay, well, I won't bring you the announcement, but Blue Owl, basically they back into loans. They're a lender. They partnered with PayPal, big splashy headline that actually caused the stock to go up, which is nice. But they said that they're doing the same thing as what PayPal did back in the summer of 2023 with It was in my mind. It starts with a K, a KKR over in Europe, where PayPal has these buy now, pay later loans, and they are loans by any definition. Now, in the United States with Blue Owl, what they're doing is pay in 4 loans. They're allowing Blue Owl to actually come in and back in that with their money. So basically, they're shifting the risk over to Blue Owl themselves, up to $7 billion over the next 2 years. Now, these are pay in 4 loans. So there's no interest at all. There's no late fees. And so you pay the first of 4 installments immediately, and then the rest over the next 6 weeks. Now, what does PayPal get out of this? Buy now, pay later, other than cross-border trade, is their highest grossing product as far as percent. Unlike a normal PayPal transaction, they get 4.99%. You might think that that's egregious, but that's actually very small compared to other buy now, pay later companies. And they've done very little with buy now, pay later compared to what I thought that they should have done prior to Alex Chriss coming in. Now, it is growing at 20%, 21% or so year over year. But this absolutely signals that they're going to be accelerating buy now, pay later, especially in the United States, which, by the way, it's not nearly as large as what they're doing right now in the UK or also Japan, and just in time for the holiday season as well. They've talked about personalization, that PayPal button, that if they know you and they're like, oh, you like to use buy now, pay later, you'll see that featured right there on the PayPal button as well. And so this basically allows them, without having to be capital constrained, to be able to open the floodgates, so to speak, as it relates to buy now, pay later. What does Blue Owl get from that? I'm sure they get some of that cut. So perhaps the difference between what PayPal gets for a normal PayPal transaction versus a buy now, pay later transaction, that maybe they're giving that over to Blue Owl. Maybe there's still some benefit, but either way, they're driving volume on branded, and branded does need to accelerate. That's one of those bear case things that people have been looking at for a while. Branded experiences, which include pay by Venmo, again, that's going to accelerate ridiculously, especially in January when PayPal World goes live, also through Venmo partnerships with Big 10 and Big 12. All right, that's the last thing that I had to cover as far as PayPal news. See if there's anything else in the comments here as well. I think so too, Duck. I know that you made a risky move there. You shifted some stock over to Leaps. Now there's time to do that, and I hope that prints for you. I'm not advising anybody else to follow you in on that because it can be risky. But I think the rewards maybe aren't that far away. Big investing. Thank you for your donation. Thank you, sir. I'm going to do heavy 90 on 90 call 1 January 27. Why do you think big money haven't poured money into PayPal yet? PayPal chart looks like Alibaba. I mean, we see that on a lot of tickers. A whole lot of tickers will do that, where it'll sit flat. People forget it. They'll say this company is dead. The stock is dead. And the moment that you see that narrative shift and you see the stock starting to move up and you've seen the company execute, it can't all be narrative. Otherwise, you're just a meme stock. PayPal is certainly not that. That's when people actually look with a fresh pair of eyeballs on the stock and say, okay, actually, they've done something incredible here. And frankly, they're in the process of doing that. They're executing well. If that ever changes, by the way, I'm not afraid to just say, okay, I don't see it, guys. I'm out. I'm done. And here's why. I'll always be open and honest with you guys. If something changes in my mind, I'm not always right, though. Zettel is great, too, on the percent that they take. Yeah, they I mean, like, honestly, they also have a couple of partnerships as well for POS terminals that I think will continue to add value to them. PayPal is a very exciting future. I don't see a world where the price stays in the 60s for much longer. Sadly, bears would also agree with you too. But yeah, we bulls, I mean, it's been there for a while. It can be as well. Again, we might continue to see it trade range bound all the way through January, but I think as long as macro is intact, there's no like absolutely crazy stuff with tariffs, which we didn't even talk about tonight. De minimis payments going away and at the end of August, worldwide, not just through China corridor. You know, that was just one of those things that a lot of payments companies just had to digest and swallow. Matthew said, not sure if discussed already, but you think PayPal is open to be acquired? If so, who do you think would acquire them? This is one of those things that I looked into some last year. And at the time, I thought regulators would absolutely stop that. Regulators are a little bit more friendly these days towards payments companies, and acquisitions and mergers too. but there is still some regulatory scrutiny there. I think a natural candidate would be something that the regulators might see as abnormal and unnatural and absolutely prevent it. But Google and Apple would be two natural partners. Google and PayPal have done a lot, and I mean a lot of close work over the last year together, actually even a little bit longer than a year. Of course, they've been partnered in a lot of things, but it would make sense because they'd actually have a payment service provider. I'm not sure regulators would allow that. Same with Apple and Apple Pay too. Not nearly as much work and relationships, but it would be one of those things as well. Would Visa and MasterCard buy them out and acquire them? I don't think so, but maybe American Express I could see as somebody that might buy them out. But I don't know how open PayPal would actually be to an acquisition at this point. I don't think they want to be acquired. I don't think they're looking to be acquired. And that's actually one of those dangers, bear case that I didn't even talk about, is if somebody actually wants to come and do a takeover of the company, an activist investor, but even more so, somebody that's just trying to buy a certain amount of shares so they can buy out the company, trying to poison pill themselves while doing everything else that they're doing. Thankfully, we're not seeing that. So when do we see PayPal make it back up on your wall behind you? I did remove that. A number of you guys saw that. This jacket right here, which is an amazing jacket. It's a Palantir jacket. When it's jacket weather, I'll take that out and I'll be wearing it on a daily basis. The other two will probably stay up. I do have some nice PayPal shirts to share up, to put up there, but yeah, nothing changed in my position or anything. I just felt like it was time to rotate that. And the shirt was wrinkling a little bit. I may actually, I'm supposed to in October start working on the background behind me. Again, this is a hobby of mine. It's a fun hobby, but you might not see shirts behind there. I'll have to actually see what's going to look like after a while. Thank you, Lourdes. Thank you others as well for being here. And let's see. Nope, that's not a comment we need to necessarily look at. All right, guys, I'm going to keep it there a little bit shorter. Again, tomorrow night, we're looking at doing the FinTech Friday. We'll discuss a lot more on SoFi, some Robinhood stuff, maybe Shift 4. Tanner, I know, was talking about that tonight. And probably, we'll throw on some NVIDIA or Tesla as well, like we always do too. But I want to thank you guys for being here with me tonight. And you guys have a great night. Happy investing.